To itemize or not, that is the question. That would be your Schedule A. Well, 2015 filing season, the standard deduction is fairly liberal. If you're single, under age 65, $6,300 is just the given. And if you have expenses higher than that, you would of course be able to itemize on Schedule A. Also, you get a personal exemption of $4,000. So a single person has $10,300 of exempted income before ever having to pay tax on income. Many people come to me and they say, but I pay property tax and I do charitable contributions. Well, if your income doesn't warrant us to itemize, then it's silly to go through that exercise. If you're in a zero tax liability, that may not make sense or be necessary to itemize. Let's talk about some overlooked deductions. Are you still working and under age 70 and a half? How about an IRA contribution? We talked about those taxable accounts that were creating extra taxes on money that you're not using. By using the same money, you may be able to just use the tax umbrella of an IRA, and that will be a reduction on your taxes as long as you don't exceed the income limits and or have a plan available at work. So it's important you talk to a tax or financial professional to make sure that you do qualify for a deductible IRA contribution. What's great about this too is that you have until April 15th of this year to fund that IRA for 2015. So you in essence could use your tax return to fund your IRA, as long as the money is deposited in the account by April 15th. You would need to make that decision before filing your taxes because you would want that credit. And typically, being in a 10 to 18% effective tax rate, every $1,000 again that you put in could be saving you anywhere to $180 for every 1,000. Now, are you retired, having to take the dreaded RMD, required minimum distribution, which happens at age 70 and a half? A lot of confusion about that too, so it's important that you have proper advice. But they extended or permanently instated the law that you can do what's called a QCD, qualified charitable distribution. As long as the money comes directly from your IRA and goes to your church or charity, you do not claim it on the front page of your tax return. So instead of where you normally say would take your RMD, have to claim that, be taxed on it, and then write off your charitable contributions on your itemized deductions, it will typically give you a much better tax break and lower your AGI by not having that amount on the front of your tax return. You don't have to take the full RMD and give it to charity, so you can specify a specific amount. Non-cash charitable contributions. Keep track of what you give. You know, most of the places like Savers, Salvation Army, Goodwill have made it pretty easy. Some even have like a drive-through service. Make sure that you get a receipt and write down the items that you donated. Using thrift shop value. You can use calculators that are available online to get an idea of the cost if you're unsure. Remember, you can also deduct mileage for volunteer or charitable. Also, even if you're attending a charitable event, those miles are deductible also. And you can deduct out-of-pocket expenses. Say, for instance, your church is having a fundraiser and you bake cookies for that, or you bring supplies to create some things for them to sell. The cost of the supplies is deductible. Investment expenses. This one is subject to 2% of your adjusted gross income, the number on the front page. Well, if you have a brokerage account, you may not even know what you're paying in investment expenses. Typically, they say they'll manage your money, oversee your account for, say, 1% or 2% per year. Well, that amount can be expensed if you itemize after the 2% exclusion. Well, if you're paying fees in your IRA to have it managed, unfortunately, those are not deductible. A simple strategy, though, would be to have the payments made outside of the IRA, be a credit card or writing a check or from your non-qualified brokerage account. Therefore, you could deduct the full amount of investment expenses. And what I've seen on a lot of the year-end brokerage statements is it's not easy to find what you're paying in fees. It may be buried on page 22 of 25 pages. So it's important you ask and understand and know what investment expenses you're paying. Now let's talk medical expenses, because this could be a big deal. First, you do have to itemize. So this would be going on your Schedule A. And your medical expenses have to be roughly 10% more than that AGI, adjusted gross income. The laws and your health can change every year, so don't assume that you don't have enough to claim medical. Review this every year. The first one is health insurance premiums. Well, if you're working for a company, many times they provide the health insurance, or they'll pay part of it and the other is deducted from your income. We want to know if it's pre-tax or not. If it's pre-tax, it means you already got a break, so we cannot include it. Now we have other expenses, so this adds up, especially if you're retired. You have Medicare Part B. You have Medicare Supplement, Medicare Part D possibly, a vision plan, a dental plan, long-term care insurance. All of those premiums count. Then we have co-pays, deductibles, out-of-pocket for dental, vision, chiropractic, therapy, prescribed exercises, dentures, implants, wigs, crutches. If you were blind, a seeing eye dog, special equipment for deaf or blind, modifications to your home, transportation, lodging, conferences. I had somebody who had to go to Mayo Clinic. The airfare, the hotel room, and meals were deductible. And if you do attend conferences related to a health issue that you have, you're able to deduct the cost of those conferences. Prescription medications. In most places like Walgreens, Walmart, CVS, make it pretty simple. If you go there for your prescriptions, they'll give you a year-end printout. Mileage to and from appointments. This can mount up very quickly. Say you needed physical therapy after a surgery, and you had to go 3, 4, 5 times a week. The mileage to the therapy and back is deductible. And free to anybody, our medical checklist is available on our website, www.merlactax.biz, under the $69 tax prep tab. Now I'll briefly review some of the tax laws that were extended or made permanent towards the end of last year. First, teachers. They qualify for an educator expense, which goes on the front page of your tax return, up to $250 per teacher, principal, somebody that works in the school that would be possibly buying supplies for their classroom. This law has been made permanent, so good news. That means that every year, if you're qualified to take the deduction, you'll get it. Tuition and fees deduction. Now, this would be for higher education, and it's for higher income earners that didn't qualify for some of the other education credits. You're able to take an above-the-line deduction, meaning it's on the front page of your 1040. This was extended through 2016. Now, if you itemize and you have mortgage insurance premiums, like many FHA loans would have, for example, you're able to deduct those mortgage insurance premiums. This was extended through 2016. Important, if you did refinance or you sold your home and purchased another one, it's good to bring the HUD or the settlement statement to your tax preparation appointment to make sure there's no additional fees, points, mortgage insurance you paid up front. That would be deductible. Most often, the forms issued from your mortgage company will have a separate box that will disclose the mortgage insurance premiums that you pay. This is a big deal. The next one, mortgage debt exclusion. If you had a foreclosure or a short sale, you could have been taxed for the difference between the mortgage and what the property sold for. Well, through the last several years, there has been forgiveness on that extra debt on your primary residence. Well, this was extended through 2016. And also, if you have your home under contract by the end of 2016, you would also qualify for the forgiveness in 2017. So if you have a situation where you're considering a short sale or you're in foreclosure or getting to that point, make sure it's resolved by the end of 2016. Otherwise, you may be liable for the difference and have to pay tax on that. Energy credits. This one was also extended through 2016. And it's been in effect, and I'd have to look back exactly how many years, but I would say at least 4 years. And it's up to $500 over all those years. But that includes any improvements, which would be windows, doors, storm doors, insulation. So think about any improvements you've made that maybe qualify for the energy credit. And remember, it doesn't include labor. Many times I see bills for this and it's just one lump sum from a contractor. So I encourage you to have it broken out so that you have the idea of the cost of the materials. Also, there's a 30% credit for alternative energy and also for purchasing an electric vehicle. Now, the sales tax deduction. This has been enacted as a permanent law. And this is good news, especially for seniors. You have a choice when you itemize whether to take income tax or sales tax for your state. Most people that are working will use income tax that was withheld from their paycheck throughout the year. But Illinois reduced their income tax to 3% for 2015, so we may see more people qualifying to use sales tax even if they're working. Now, if you're retired, you don't pay state income tax from a paycheck, so sales tax is going to give you that deduction on your Schedule A. It was amazing to me when I started reviewing sales tax rates. In Illinois, sales tax can range from 6.25% to 11%, and it's dependent on the county and the locality where you reside. So Arlington Heights is at 10% sales tax versus Huntley in McHenry County at 7%. So it's important to look up what your sales tax is for your given residence in that area and make sure that you're getting credit where credit's due. In addition to that standard deduction based on your AGI, you may also qualify to add additional sales tax for a major purchase. If you bought a vehicle, a motorhome, ATV, usually it's pretty clear on the receipt how much you paid for sales tax. Make sure you bring that to your tax appointment. But there's other major purchases that you can consider also. What if you bought all new appliances or you had a major remodeling job and the materials were very expensive? That would also qualify. Business use of home. This is becoming more common. If you're self-employed, and now I see many employees that are working out of their home, you may be able to deduct certain expenses for the part of your home that you use for business, but it must be exclusively and regularly used as your principal place of business. There's some other rules here that you could read through that would also qualify. And deductible expenses for business use would include whatever percentage of square feet that is versus the whole square footage of the home, that percentage of real estate tax, mortgage interest or rent, casualty losses, utilities, insurance, depreciation, maintenance, and repairs all get added as a deduction. Here's just another couple tax issues that seem to be very confusing. Education expenses. If you are in school for higher education or you have a child attending school, you can qualify for some of the education credits, even if you use a loan to pay for the tuition and fees. Each college or institution should issue a Form 1098-T, and that would be used to prepare your taxes and qualify for the education credits. Also, the American Opportunity Act allows you to cover other costs for equipment and supplies necessary for the classes that you've taken. Say you even needed to purchase a laptop in order to be able to pass a class, even taking it online. We may be able to use that laptop as a deduction and get you some extra credits. College students that are working, can their parents still claim them as a dependent? Most often, if they're up to age 23, it's more beneficial for the parent to claim the child and get the education credits because the child is probably not in a high earnings bracket. But it's important. I see too often the kids jump the gun, file their taxes, even using a free file service, and they say that no one else is claiming them as a dependent. Then we go to file the parents' taxes, and it's rejected because that Social Security number had already been used to file a return. Creates a whole can of worms and may require an amendment for the child and paper filing for the parent. So I encourage you, if you do have children, college students, they're getting a W-2, help them file their taxes to make sure it's done properly. Who can you claim as a dependent? It can be another adult in your household if they've earned under $4,000. Or say you're caring for your parent, they're living with you, and only have Social Security. They can be considered as a dependent. This was a good one. I just work for cash, so why should I file? Well, sometimes we find that there's a great benefit. I have a lady who does bartending and childcare, and she works primarily for cash. She has a child. Well, she didn't file for several years, so she didn't pay in anything, didn't think she would get anything back. Well, this is legal, it's the law, and it's the guidelines. She qualifies for earned income credit and child tax credit. So if we're not putting a dime into withholding, she actually has a $4,000 refund. Would that make sense to file that you're self-employed and you have your business for yourself? Also, you may have a small hobby, but making money, say you do woodworking and you sell at some craft fairs during the summer. Well, you might have to buy equipment and supplies and tools for your crafts, and it may even create a small business loss, which actually can save you in taxes. And then I see many people that are self-employed don't understand or take advantage of all the write-offs that are available to them. So I'm pretty extensive when I interview a self-employed person and knowing the industry that they're in to make sure that they're getting the most deductions for actual expenses, like their cell phone, internet use at home, their printer, their paper, meals and entertainment, just to name a few. In closing, I would just like to say that I hope you picked up on at least one idea to help you reduce your taxes and keep more money in your pocket. I appreciate you taking time and learning about some important things here that can benefit you. If you do have any questions or would like to schedule an appointment, feel free to give us a call at 779-220-9608. Remember, you hold the power to control your financial future. Let's get there together.